Today's session is on export credit agencies and export finance as a catalytic mobilizer of private capital. And this is an industry I know well, I've been involved in for 30 plus years. And it's an industry that sees fantastic collaboration between public and private. And really, it's time for it to have a place and a recognized place within the global financial architecture. From the point of view of this industry, there are a number of players, all of whom are represented around this table. We have an export credit agency, we have a commercial bank, we have an impact investor, we have a regional development bank, we have an export finance bank, we have a multilateral political risk insurer, and we have, in my mind, the most important player, sorry everybody else, a private sector insurance company who provides massive amounts of risk capacity to the market in support of sustainable finance. And there's been quite a movement within this industry to recognize export finance as sustainable finance. And so it's a great pleasure and honor for me to be moderating this panel. I straddle both worlds and see this as an opportunity to really share some of the insights that this panel has on where export credit really fits within the overall strategy. So with that, and in the theme that was shared yesterday around PDBs and philanthropies, no longer strangers, we really hope that this session will enlighten the PDB community that export credit should no longer be strangers. So with that, I want to introduce the Berne Union, which is the organization of Association of Credit and Political Risks Insurers, both public and private. To my left is Maëlia Dufour, who's the president of the Berne Union, as well as the CIO of BPI France, the export credit agency, Assurance Crédit. And to her left is Paul Heaney, who's the Secretary General of the Berne Union. So let me hand it over to Maëlia to make some words of introduction.
Thank you very much, Diana. I am very honored to be here to represent the Berne Union, which is an active community of 85 members from 67 countries of the world, which gather government-backed official export credit agencies, multilateral financial institutions, and private insurers. And this is not just to tell you that. In this panel, we already have 4 of us. MIGA, a multilateral, Vantage, a private insurer, Bancomex, an ECA, and I. So you can see that we are always in the same place at the same time, just to talk to you about how it is important to be in the Berne Union. Why? Because we collectively provide around almost 3 trillion of payment risk protection to banks and exporters and investors, of course, which amounts to almost 13% of global cross-border trade, which is quite a lot for an association. We have a worldwide experience on the business, on the export business, in credit insurance, in investment, direct lending, because as you know, some ECAs do direct lending, and multilaterals, of course, too, bonds and working capital. So this is a wide range of products that we all provide in order to fit the need of our clients. Every year, all these members create new products to fit the needs of the clients and we have an ever-changing world, and we had to create products like after COVID or during after the world of Ukraine, and it is always new things, and we share all those products together. Every year we organize an AGM and a spring meeting in any country of the world. And we organize two technical panels on claims, reinsurance, project finance, SMEs financing, pricing, digitalization, where the experts in all our industry come and talk together in order always to improve. Our strategic objectives are we have a mission to actively facilitate cross-border trade by supporting international acceptance of sound principle in export credit and foreign investment. So our main objectives, we have others, but the main one are to ensure zero market failure. What does that mean is that we don't want to have a client, an exporter or company coming to us telling us, I lost my contract because I couldn't find any financing. So we talk to each other, we do some reinsurance, when the private market is there, then they say back. For multilateral, they can provide lending too. So this is very, very important to ensure zero market failure if we want that the cross-border trade grows. Another very big objective is to enhance climate action to reach a net zero target. And in that, we talk together about the financial incentives that we can provide to the clients, decarbonization, and reach a net zero target, and transparency of our government in the policies that they provide in order to reach a net zero target, which is very important. And I was listening to some of the panel of the conference, and sustainable project and climate was in all the panels, so it is very important. Another very important objective is to develop cooperative partnership by targeting a more customer-oriented collaboration between ECAs, DFIs, multilateral and private insurers. And the last one is to forge a partnership with institutions globally, and especially in Latin America. I'm not saying that because we are in Latin America. I'm saying that because we have inside the Bern Union many members from Europe, many members from Asia, many members from Africa, but we don't have enough from Latin American. We are very happy to have Bancomex, but we would like to have more, because when we talk about the world, we need to have the opinion of those guys that live in Latin America. It is very important. So this is something that we really want to improve, because ensuring export is a worldwide dynamic that must gather all the continents. And I heard that yesterday and the day before, that Latin America has a strong potential in what everybody is looking for. It's renewable energy with solar. The sun is there, and the heat too. The wind and geothermy and natural reserve like water, trees, biodiversity. So you have a strong potential with that. We really have to be ready to build new alliances for the next generation of development financing, and we would be very happy to work with development banks too. We also provide a forum for professional exchanges and networking among members. And we engage with stakeholders across international finance to promote best practice and cooperation in order to fit the needs of our clients. Knowledge exchange, contact, and education. The Bern Union has many committees where we share a lot of information. And this is great because everybody is transparent and we are not there saying, no, I'm not going to say that to that ECA because he might do the same product. No, we share all our information and we improve with what the other have done. We have online webinars, we have specialist and technical groups, as I said, and we have a specific climate working group on cross-country, and we have cross-country discussion around climate finance and actions to be taken not to fall behind. We have young professional engagement, more and more young professional inside the Bern Union, and we transfer our knowledge to that next generation, and of course internship exchanges. Right now there is someone from Keisho that is in the secretariat. We do a lot of data and research and insights, so we have a quarterly business confidence index that you should read. It is very interesting on what we are doing, country risk attitude, and qualitative research too. And of course, media communication and outreach is very important in order to be the voice of the industry. So we have thought leadership publication. We engage with international stakeholders and education of policymakers and regulators. So to conclude on this, I would like to say that the Bern Union is a connection center, and definitely that can help foster partnership, innovation, and collaboration among members, but also with development banks. We have to establish better links between all the stakeholders that work for export to enable information and collaboration to better support our clients. And I will pass over to Paul.
Thank you very much, Malia. Okay, so I'd also like to say that I'm very grateful to Fix for the invitation, not only to participate in the meeting today, but to help curate this session. To help curate this session and talk a little bit about what our industry does. The purpose of the session is to talk about catalyzing private sector finance for sustainable economic development. And I really want to concentrate as much as possible on the panel discussion. We've got a lot of very interesting perspectives around the table within the BU and otherwise. Otherwise, as Maile said, the BU is a connection center. So I think one of the first things that strikes me is that a lot of the topics that we're discussing and addressing within Bern Union meetings when we're focused on our own industry, on export credit insurance, really align with the themes of this meeting and what the Finance in Common initiative is about. We're also talking about financing gaps for emerging markets investment, access to finance for SMEs, climate finance, and public and private sector dynamic. So I think there's, around these topics, there's a real convergence that connects together the institutions that we host within the Bern Union and the other participants in this meeting around FIX. What I wanted to do very briefly is try to frame the discussion a little bit around where I see the role of export credit insurance in the wider international financial ecosystem, and also maybe to look a little bit at where our industry could provide some positive examples that might be absorbed into this dialogue. So 3 main points that I wanted to discuss. This is around trade impact and how this is a natural way to connect commercial and development interests. This is obviously essential if we want to talk about private sector capital mobilization. Also on insurance instruments, I think it's worth pointing out that these are naturally catalytic and that they help us to carve up and structure risk. I think someone in one of the panels yesterday commented that having finance available is not necessarily always the issue, but it's about being able to structure the transactions in order to ensure that projects are viable. So I think that's an important point to make. And finally, I wanted to talk a little bit about the ecosystem, where the export credit insurance industry fits within that, and what are the dynamics within our industry. So very briefly, this is the slide is intended to paint a picture of the Berne Union view on the international finance ecosystem. So this divides up the sectors into public and private spheres, insurance and lending instruments, and development, trade, and commercial objectives. And I think the important question is how we can most efficiently connect together the different parts of this picture. So as an organization, the Berne Union is focused on products, so on non-payment insurance and cover for credit and political risks. That's the top line of the diagram, and that shows that already within the discussions that are taking place with our membership, it's already a mixed ecosystem that's spanning across development, trade, and commercial interests. So that means we have an organization like MIGA and RUSBA here, which is development focused, but also part of the technical dialogue that the Berne Union hosts around the instruments for non-payment insurance and political risk and investment insurance. We have ECAs which have a mandate to support national exports, and ECAs are, just like public development banks, a huge variety of different types of institutions. But the ECAs are also bringing in commercial finance, and I think the main point that I wanted to make with this picture is that ECA cover brings in the commercial banks like Chris with Investec, and connects together that bottom sector of the picture. Then on the far right, we have the private credit and political risk insurance, and Dan's here on the panel to talk a little bit more about that. The private market brings great flexibility and incredible additional capacity to the market, and this is a trend that we've seen in our industry over the past couple of decades. A huge growth in the capacity of the private credit and political risk insurance market to support increasingly longer tenor transactions. But this is not capacity in isolation. So I think the main point that I wanted to make is that there's a synergy between the different institutions within the export credit industry and how they work together, and a complementary role between how the private market works with multilateral organizations, with ECAs, and also with commercial banks, connecting together some of those parts with complementary perspectives on risk horizon, on sector concentration, on expertise, combining together the ECA's long-term outlook with the capacity of the private market, and also benefiting from some of the halo effects the ECAs bring to bear when dealing with sovereign transactions and enabling finance in that way. So the main message here is that the core mandates and specific products might differ, but that there is a convergence around projects and the ultimate objectives that pretty much all of the institution types on this diagram are focused on. Credit and political risk insurance as an industry spans across development, trade, and commercial finance, and I think we have quite a good model within our industry, which again the panel will talk more about in terms of cooperation between the public and private spheres. And I think our objective is to understand a little bit more how we can connect those other institutions, the DFIs, the MDBs, and the national development banks. Everyone has a unique role to play here, and particularly as we converge around common interests, I think having a dialogue to discuss that is more important than ever. So very briefly then, I also wanted to highlight the insurance product or insurance instruments as a unique enabler of finance. When we think about export promotion and what an export credit agency does, for example, we think about supporting exporters or supporting investors, providing risk mitigation or support for internationalization, foreign investment, new market entry. And these are perhaps the core goals of what an ECA is mandated to do. But at the same time, insurance is already a secondary market. ECAs and others providing export credit insurance are working with the primary lenders, and already through that, catalyzing finance from a range of different sources, development, commercial, and so on, and helping them to increase and manage their lending capacity. And at the same time, the other part of the picture is the ultimate beneficiaries, so the borrowers, the buyers of the export contracts, and through ECA support or through export credit support, enabling access to finance for those borrowers, reducing the cost of finance, and ultimately de-risking and enabling bankability of projects. So the main message really is that even if the starting point is export promotion, that the end outcome includes a whole host of impacts relating to enabling finance and also economic impact in critical sectors. The final point that I wanted to make is just a little bit of a perspective on the size and the impact of the industry that the Berne Union represents. So Miley mentioned almost $3 trillion of new commitments from Berne Union members in 2022, which is a really huge sum. And if we compare this to other flows of finance, it's quite a significant impact that can have. A large part of this is support for short-term trade finance, which is not really the focus of what we're talking about here in this panel. But it's also worth emphasizing that trade ecosystems in general, support for the flow of finance and the confidence to be able to trade with reduced risk plays a very important role in economic development, supply chains as well. Looking at longer tenor investment and cross-border investments for critical projects, that's still a pretty huge sum of $211 billion in political risk insurance, medium and long-term export credit insurance that Berne Union members provided in 2022. And 65% of that is supporting finance into emerging markets and developing economies. So that finance is directly funding the economic development in some of the key destination markets that we're discussing around economic development and climate impact. And I think the other key thing to point out is the sectors that this finance is having an impact on. Trade and the support of trade and innovation around that is also critical for technology transfer and helping develop the new technologies that we need to develop economies in a sustainable way. And the combination that export credit insurance brings of the commercial aspects and the developmental potential of trade is a really important way to deliver that. So that's pretty much all I wanted to say to try and frame the discussion. The main point is that export credit and political risk insurance are not just tools to mitigate risk, but really can be active contributors towards building and guiding structural economic change, even when that's not the core mandate of the institution behind it. With that said, I'd like to pass over to Diana, who's going to lead us through a discussion with some of the other participants represented here.
Many thanks, Maëlia and Paul. As you can see, this is a significant industry, and I mentioned we have the privilege of being strategic advisors to both the export credit system as well as the PDB system. And so if you looked at Paul's graphic, the square that showed everybody, we do have everybody represented in that ecosystem. So what we'll do is start with Rouzbeh Asher Yeri from MIGA. And MIGA, as you know, is a member of the World Bank Group and really spans both of these concepts, the Berne Union as a political risk insurer, a multilateral specialized insurer, and as a member of the World Bank Group, a DFI. So over to you, Rusba.
Thank you very much. So for those of you who don't know, I work at MIGA, the Multilateral Investment Guarantee Agency. We are the standalone guarantee agency of the World Bank Group. Our mandate is to promote foreign direct investment into our member countries. So the way that we work is we cover private investors into these markets for their investments. Now, as it relates to public development banks, what we do is we are a one-stop shop for wholesale funding. Well, we are able to bring in commercial banks in order to fund on a wholesale basis your operations. And what we do is we extend tenors and we reduce costs on behalf of our clients. And what we also are able to do is we are able to we are not content tied to any content. We're agnostic. We can do any commercial bank in the world, lending into any public development bank. Now, the way that MIGA works is that we also leverage our balance sheet by using the private reinsurance market. So any transaction that we come in, we will front the transaction and then syndicate the risk out into the private market. And we leverage the private market in a way that as fronting the transaction, they will go into regions and into transactions they would not otherwise go into. So for example, we have about $400 million in paid-in capital based on our reinsurance capacity or de-risking or syndication. We're doing $27 billion in guarantees as a portfolio. So that's how we're leveraging both the private reinsurance market and the commercial banks lending into these PDBs. And for the commercial banks working with MIGA, there's an alignment of incentives, right? We're ESG focused, we're SDGs, and they're also looking to invest in these kind of into these kind of projects, and we're able to then take that money and support a country's national development plans through their public development banks. So it's a win-win for everybody, and that's how I see MIGA leveraging the private sector into our member countries.
Thank you very much, Rusba. You used a word which I think needs to be noted, and that's untied. And I think that's been one of the reasons why ECAs and DFIs have been strangers, because of the concept of tying to national exports. And I think some of our other speakers may want to touch on that. Let me hand it over back to Maëla, but in this instance, as BPI France, as the French ECA, to really talk about what kind of value an ECA provides to these transactions, this sustainable development transactions.
Thank you, Diana. This is my ECA hat. So I'm talking about BPI France Assurance Export. If I would like to say one thing, one word, the ECAs have to be flexible. But this works for private and multilaterals too. Why? Because if you look back, 10 years back, in 10 years we have had 6 crises. All of them have been very different. The financial crisis didn't have the same implication than the COVID crisis, than the war in Ukraine. And we always have to adapt to how the world is changing. And then to find new products according to what the clients needs. In the ECA, they have several mandates. Usually they are backed by the government. For example, in BPI France, we have 60 billion euro in portfolio. So we are very close to the banks and the exporters in many countries of the world. And regarding the world, because we are tied to the world when you just work for export and international, they have some ECAs have changed a little bit their framework, providing lending. You know that some ECAs don't provide direct lending. Some of them created new direct lending proposition. This could have fit after the financial crisis because the commercial bank were not there anymore. And really what I can see is the development of new product. New product, we didn't do any domestic product, but now we can do some, and I know that some other members of the Bank Union can do it too. And another thing is that, because I cannot prevent myself from talking about climate. Climate is a word that we hear every day, every minute. And climate will mean new technologies. So we will have new buyers in new technology. We will have new clients, exporters that will create new technology. I don't know if there is a startup that can find energy out of heat. I think it will be a millionaire here. This is very important to be there, because we will have new exporters and new buyers that we don't know, and we will have to dare to take the risk on those new technology exporters and buyers. This is very important. New technology for climate, of course. Diana, you talked, and Miga, about untied and national interest, national content, untied product. This is very important, and it is in the move of usually an ECA, because I'm talking about an ECA. An ECA requires national content. A lot of ECAs have take the turn of looking at national interest instead of national content. Which is very important, and a lot of ECAs have products, and we do too, an untied product that don't require national content, which is important. But there is a conversion with the DFIs on this subject. Of course, we are tied to some regulation, like the OECD regulation, but we are all very happy that it has been modernized. It takes time at the OECD to modernize the rules. It's an old lady, the OECD, and I think that we should do more. But in the modernization, again, there have been some improvement to be able to finance up to 22 years especially for climate or sustainable project, which is very important. Our role in climate, of course, we push our companies that pollute to try to find transition lever. But it is easy to say to the other, well, you should do that, which is very complicated, but what, as an ECA, we have to do. And we have to help those companies, or the one that provide sustainable project, with financial incentives. That means that for them to be better covered. And we have created financial incentives inside BPI France, but I know that other members of the Bank Union have done so, and this is very important. And we're thinking about improving those financial incentives, because we really have to help them. We also have to decarbonize our portfolio. Some members are more advanced than others. Some government have explained what they want to do. The French government has done it. We cannot insure any fossil fuel on oil and gas anymore. We have to be transparent on what we are doing, and this is very important for climate. Maybe I can end telling that it is very important to work together. We are able to reinsure the private market, and we have signed a reinsurance agreement after the COVID crisis. We are able to insure contract where you have multilateral lending, for example, or from MIGA or AFD or Proparco, because they are the two French ones, with the private market. And it is important to be able to, for a project, and I would say a big project with that costs a lot, to be able to be there and share, you know, the contract and in order to cover the client in the best way. This is very important.
Thank you very much, Maelia. Let me hand it over to Gabriel Felpetto from CAF. You all know CAF. CAF has been a big player in the last 2 days. And Gabriel, just to speak about how important for your operation credit and political risk insurance is.
Yes, thank you, Diane, and good morning, everyone. As you said, we've been in the talks for some days. But I would say that in general, multilateral development banks, such as CAF, are called to increase our efforts and lending capacity. This is certainly been there in many of the sessions we've heard during all of these days. This CAF is not an exemption. We are also looking to expand our lending capacity in climate. As you know, we have self-imposed an increase our climate financing up to at least 40% of our total approvals by the year 2026. So it will be a huge increase in our climate, but it's not only climate, also in general sustainable development financing. So we're happy that our shareholders have been supportive. Just a year ago, they approved the largest capital increase in our history for a total of $7 billion, which certainly will help our lending growing. However, this is not enough. I mean, for sure, we have to work together. We have to be innovative. We have to create more instruments. While certainly we have to maintain our high ratings. I mean, this is also crucial for our business model. In general, this is the model that all multilateral development banks have. I mean, we have to be an efficient intermediary between capital markets and our clients, our region. So we have to balance both things. I mean, leverage, but also ratings. So this is where instruments play a role. I mean, we, as all multilaterals, use traditional co-financing. We sell some of our assets. We have A and B loans as well. We are also looking at other different kind of instruments, such as exchanging exposure with other supranationals. That is also something that helps to reduce concentration and also reduce the use of capital. Certainly, it's another topic. It's new for supranationals. The issuance of hybrid capital has never been done. We heard that some other supranationals that are thinking of that. That certainly is on the radar as well, including the use of SDRs, the special drawing rights, that has been on the talks for some time now. We hope this at the end reaches at some point in the coming months. But then this is still not enough. I mean, then this is where we see the insurance and guarantees of our credit portfolio fits very well. Certainly, this reduces our use of capital. This, I would say, the main reason. Concentration is also some of the other benefits that this may have, because, of course, it will reduce the exposure to a client, to a country, and now have the risk of the counterparty. It will reduce concentration risk, which is also, particularly in the case of multilateral development banks, is a high portion of the capital charge concentration, not just direct credit risk. And certainly, the other benefit is to increase the size of our deals, for sure. I mean, we have to scale up, and we need to do larger deals. And this is also a way, to have some kind of credit risk mitigation can help on increases the size of deals. However, these benefits have some issues, as everything in life. We have to deal with rating agencies, for sure. The cost of the insurance has to be compensated with a high credit substitution. If it's 100%, which is better, of course, but it has to be high for us to be able to compensate the cost that the insurance has, of course. We have to monitor also the leverage. Despite that, reducing the capital charge is a benefit for sure, but we cannot increase the leverage too much. There are also some limits to the use of the insurance. PCT, preferred creditor treatment, is another issue, particularly in the case of supranationals such as ourselves, where the majority of the loans are with sovereigns. Preferred creditor treatment is an issue, and it's not clear, particularly from some rating agencies, whether if we insure that sovereign credit, you're just not benefit that much from the preferred creditor treatment. This is an issue, so we have to manage that thing as well. I mentioned cost. Certainly, if the idea is to reduce capital, but if the cost is high, we are reducing capital on the other way because we are having less net income, so we have to balance those. But in general, and certainly, the benefits are larger than costs, and this is a product that fits perfectly, as I mentioned before, in our mission to scale up and increase our climate and, in general, sustainable development financing. Thank you.
Thank you so much, Gabriel. Let me turn the floor over now to Chris Mittman, who's head of export finance of Investec, a vibrant South African bank, and also wearing a second hat as an impact investor in the export finance arena.
Thanks, Diana. Actually, I have a third hat, which is a surprise for you today. So first of all, Investec, who pay my salary, so I'll talk about them first. They're an African bank. We entered the export, only nice things I'll say. We entered the export finance market 13 years ago as a disruptor. It was dominated by international banks with large pools of cheap capital, in the belief that African banks can arrange infrastructure financing for infrastructure in Africa. It's not the preserve of foreign banks to do that, and we successfully proved our case, and we're the leading African bank arranger of export finance in Africa last year. The bank also has an interesting sideline in that it develops projects as well. So we have an equity mindset. When I joined the bank, we had 800 megawatts of wind and solar under development, either as sole equity or JV equity with people like GDF Suez. We know what it's like to get projects off the ground and realize them, an interesting aspect which we draw on. My second hat is co-chair of the ICC Export Finance Sustainability Working Group. I've yet to come up with a shorter name for that, but this is an interesting gathering of banks. We set it up 5 years ago to talk about sustainability. A handful of people joined. No one was really interested. 5 years later, we've got 16 bank members, and its development and impact is at the front and foremost of every single conversation banks have. I want to get that message over to everyone here today. Banks, it's not they didn't care, it was a risk-based assessment until 5 years ago. Over the last 5 years is now about outcomes and measuring impact and articulating that impact, positive or negative. So the tide is flowing now with the banks in the same direction that everyone in this room wishes it to flow. If you jump in that river, you will find yourself being swept along in harmony with the banks who are motivated to do these projects and work with you to make them happen. The third role I'm here is Investec seeded a debt fund for Africa called Acre Impact Capital. This is an open platform and a modest attempt to help provide a platform around which people in this room, ECAs, development banks, impact investors can gather to help mobilize projects and make them happen. ACRE's foundation backers were the Rockefeller Foundation in New York, but also PIDGE in the UK, owned by 7 governments. It's been fundraising for 2 years now. Amongst our investors include the European Investment Bank, Industrial Development Corporation of South Africa, FSD Africa, obviously Investec, but also Standard Bank and a handful of impact investors. And what it's proved to us is that it is possible to mandate a line all of those different entities and agree that they can hand over the keys to ACRE to help them deploy their capital efficiently. ACRE will shortly announce first close, and then we'll move forward. Just a last opening remark, if I can, Diana. I think I've been in the market for 30 years, export project finance. What I'd say is initially in Asia for 20 years and now Africa for the last 10. What I tell you is, and I think GCF made a comment about how do we leverage the profit motivation of banks. Because these guys, they just want to do, and girls, they just want to do deals. They just want to close deals and make money. That's what drives them. And they can be an enormous force for good if we can harness them to do that. But what I'd also say is that banks will never go naked into major infrastructure projects in developing markets. They want the right collection of co-financiers and credit insurers around the MEGA, the private sector DAN, and national development banks. So this is a key message I wanted to leave. Those projects will not happen without that community, and my interest in seeing how we can even get a greater whole-of-government approach to this topic.
Thank you so much, Chris, and I think you've really highlighted the appetite and interest of the commercial banking sector. Let me move to Jorge Velasquez from Banco Mext, an Exim bank, and I know we have a couple of other Exim banks in the room from Korea, and I believe India is here as well. But Jorge, from your perspective, as a national Exim bank, thinking about what development impact means for your country, perhaps you could give some elaboration of how you approach this.
Diana, very much. Thank you very much. Since the export finance industry is the instrument that generates jobs and stimulates economic growth, it is essential for countries to have the export finance industry in an accessible and sustainable way. In addition, the export finance industry affirms and allows international trade to occur, supporting the access of companies and their products to the most difficult external markets and risk. More so, the export credit, insurance, and warranty sector is at the interface of global finance and trade, as it provides a bridge between finance, trade, and real economy, acting as a catalyst for cross-border investment and economic growth. An important data from Bear Union tell us that about 9% of world trade depends on some type of credit, insurance, warranty from a bank or from other financial institution. This industry must seek the creation of the necessary jobs by developing a structure that strengthens the banking of exporting companies and their projects. This will help to develop a strong potential to tackle major economic and social challenges and can be a critical tool to direct capital towards projects with a sustainable impact as well as addressing sustainable development goals. In addition, the export finance industry must be flexible and innovate to support and mitigate the risks of projects and regions so that such change can occur and translate into the development of SMEs in the region and supporting a small project. A very important point is that private partnership are very important, as well as linking ECAs to VAN in the developing countries to support greater financial participation and market education for the SMEs, to introduce them the international trade and be able to close the gap between developed and developing countries. The export finance can help to bridge the infrastructure gap between developed and developing countries and help create essential services for underserved communities. For example, Bancomex can be your bridge to a structured transaction with Mexican content in Latin America, for example. Some of the main challenges that the export finance industry can face are to enable international trade by supporting value chains so that the development of that region and its SME takes place, and training and educating SMEs on ESG issues so they can understand environmental and social reporting and what is the easiest way to do it. Finally, to face these challenges, Bancomex can structure mechanisms that help mitigate long-term risks of nearshoring or onshoring industries in Mexico and develop specific regional programs. Thank you.
I think about the PDB database that the FIC Secretariat has been working on. Well, it's been in place and they are updating it. And what you've just described is one category of a PDB. That's an Exim bank that has a really important role within the local economy. So thank you for that. We've had Chris on the private sector representing the banks. I'd like to hand it over to Dan. On behalf of the entire political risk insurance, private sector, credit risk insurance industry. Dan, please.
Thank you. Thank you very much. And thanks to the Bern Union for organizing this panel. And thanks to the audience. This is a nice full house. There are people at the door trying to get in. So please come in, come in, come in. It's a great turnout. So a little bit about me. I've spent, I think, a little bit more than Chris. He said 30 years. I think it's getting close to 35 for me. I age you a little bit. And myself. Started out at OPIC, now called the DFC. We heard from them yesterday. Great to see them so engaged and continuing to be engaged. Then I started a political risk and credit group at Zurich Insurance, then AXA XL. And then I decided later in my career, probably one of the last places I'll work is a startup. So anybody offers you a startup, be ready to work very hard. It's much harder than I thought, but it's paying off. So this company I joined is Vantage. It's a company that received $1 billion in capital in 2020 from the Carlyle Group and from Hellman and Friedman, often investors in insurance and reinsurance. I was attracted by those investors and also the leaders who I had worked with before, the chairman and the CEO I've worked with at other companies. One thing that really attracted me, and it helped me to attract talent, was they had a really strong focus on ESG and SDG. And I was surprised to see how interested they were in these topics. And so when I present to this board, they ask me, how are you doing with these targets? And I love to hear that. So it's really good. It's a good company. They are investors who have, they're challenging us to grow a business in insurance and reinsurance, and we're off and running. So I will tell you, one of the first things I did in building my business plan was to include membership in the Bern Union. Why? Because I've been a member of the Bern Union in all of those companies that I mentioned that I've worked with before. And I saw such great value, such great leadership we have now, but also great value in the sharing of technical information and expertise. Because I think everyone around this table, right, when we're working together, right, we are better together. We can expand our knowledge, can expand some of the problems, the challenges that we have, and on capital, on risk, on management of risk, diversification of risk. It is so helpful to be part of that larger community. But a little bit about us. So I have a heavy job that Diana gave me to talk on behalf of the whole private insurance market, and I see it's only 5 minutes left in the meeting, so I'll keep it short. I would just tell you, we are one of 60 private insurers that operate globally. Many of them, maybe as many as 40, are in London with Lloyd's, Lloyd's of London, many smaller companies at Lloyd's. And then the others, like us, are corporate entities that they're insurance companies or reinsurance companies that wanted to get into this specialist class of business, which does require specialists and knowledge. What has been exciting over the last 20 plus years is really the collaboration between this growing private sector of political risk and credit insurers and the public sector. 25 years ago, it really was an anomaly. You didn't hear about collaboration. You didn't hear people talking about it. You didn't see it. There might have been one press release that would get issued once a year that said, did you know that this organization, public, worked with this private organization? Well, those press releases don't happen anymore because it's commonplace. It's very common to have the collaboration. But in order to collaborate, we have to understand each other. The private and the public has to understand each other and understand the drivers for their organizations. We also have to build capacity. So private insurers are providing capacity up to 15 to 20 years on a project finance basis these days. That's a long way, has come a long way. Large capacities. There are billions of dollars in capacity that are offered by the private insurance market for political risk and credit each year. And that capacity is not getting smaller, it's continuing to grow, particularly with the demands. The demands have continued to grow. I would say the collaboration with multilaterals, DFIs and ECAs has only grown larger. And I do think that that's continuing. One of the things with the private insurance market, to use the untied statement again, is we're not tied. It is all untied. We also can write business for new projects as well as existing projects. Why is that important? That's an opportunity for the private insurers to really look at existing portfolios even, or single risks, that a government provider or an official agency may be providing coverage. And why is that important? Because it provides additional leverage for that public agency to provide more or to expand their capabilities. I think I would probably stop it there, but I will just make another pitch for more Latin American members for the Bern Union, right? So I'm a past president of the Bern Union some years ago. We were happy to have a Bancomex as part of the organization. We had some other members in past years. And why it's important is, most of the business that we are writing is not in Latin America. Not that we don't have a strong interest, we just don't see as much. We do have some good brokers that we work with that are bringing us more opportunities in Latin America, but we have seen a lot more activity in Africa, Asia, and other places. And I do think bringing together, again, making us better together, it would be good. So it doesn't all fall on your shoulders, Jorge. Maybe Gabriel's, but I think it would be great to see more members. Thank you.
Thank you, Dan. I used to call it the credit and political risk insurance business, but I think we could start calling it the development finance insurance business, because really what you're talking about is large amounts of capacity, a lot of players, you say 60 organizations providing up to 15, 20-year terms in emerging markets from the private sector. So this is a really important feature that I think needs to come out. Dan, I know we're short of time, but you participated in a fairly significant collaboration with the DFC, I think it was. Just maybe explain that to the audience, because I think it's worthwhile.
I noticed the underwriter for that project just walked in the door, so I have to be careful what I say. All right, Marlena Hurley. No, we're very proud to have participated in the most recent Debt for Nature swap in a sense. And it was spoken about yesterday in Galapagos and Belize. This is the third. I had been involved in some of those others in a past life at a different company. We were very excited to see the opportunity to do that again. And I do think that that is quite a good example of where the private sector, again, can help leverage a government agency, a DFC, a development finance institution, to do more. So the size of that instrument is $500 million valued. Reinsurance backs half of that, right? So it's a significant ability to raise additional capital and to support additional capital through political risk insurance. And I think that's exciting, and we hope to be involved. I think more insurers are really attracted to that business for many good reasons.
Thanks for that. I want my microphone to work. Okay. Oh, yeah, it's working now. I want to just also introduce Mr. Kim from Korea Exim Bank. And what's interesting is Korea Exim Bank, which is the equivalent of Bancomex, has an office here in Colombia, in Bogota. And what's particularly interesting, Mr. Kim, in our conversation, excuse me, was that you are really mixing and you're closely collaborating with your development arm. And so I just want to welcome you. I don't know if we have time because there's a red sign saying time is up to have you speak, but I just wanted to acknowledge you in the room. And to my panelists, I wish we could have you could see that an hour for this conversation was insufficient, and you'll agree with me that we should tell the FIX Secretariat that this has to be featured in next year's program, not as a side event, but as a front and center event. So maybe I'll just take this opportunity to thank everybody on the panel for your wise words, your insights. I want to welcome the audience to really engage with this fantastic group of people, really get to understand where they fit in the ecosystem. Remember Paul's matrix of how you all fit between development, trade, the commercial, the private, the insurance, and see that we're all part of the same ecosystem. So thank you all very much.